So I think that's a good wrap on that conversation, unless you have anything else to add, Todd.
No, I think that's good. I think it might be time for smattering.
I think it is smattering o'clock.
All
So
right.
take it away. I think we're gonna see a bit of a tech theme here. Maybe some more
Well,
healthcare like last week.
yeah, I mean, I've actually got some healthcare stocks this week I want to share with some people, and I've got some technology stocks because we're seeing that move up the ranking as well. So I think that, we've got a good grouping here of names that you can add to your watch list. And I guess what I'll do is I'll again, for listeners on the podcast, thank you so much, by the way, for listening and tuning in every week to our show. Thousands of you tune in every week to listen to the Talking Stocks podcast. We are just so grateful for that and that support. And if you're watching here on YouTube, please smash that like button and subscribe so you get updated every time we post these. We're trying to do more and more content on YouTube for you. So I'm going to share my screen, Joe, and bring up, it's still on Virgin Galactic from earlier today when we were looking at it. Not going to recommend that as part of our smattering today, given the 34% move. But the first stock I wanted to mention today was C Limited, SEA Limited. Symbol there is SE. This comes from our ADRs and foreign stocks best and worst list. It's a high scoring stock in our research that's growing really rapidly, and it plays in the e-commerce, digital entertainment, and digital payment space. This has been a hot name on FinTwit. And Joe, it check marks a lot of boxes for me. We talked, any listeners, if you've tuned into the show week after week after week, you're starting to notice a trend in the way I look at stocks when I'm thinking about them. I love companies that are playing and growing growing markets, right? So, e-commerce, check mark, digital payments, check mark, digital entertainment, check mark, right? So there's some check marks for C Limited. I like fast growing companies that are growing 30% or more in revenue on the top line. And if you look, Joe, at the first quarter, C up 147% year over year.
Little more than 30% there.
Yeah, a little bit more than 30%, right? So check marking that. Doesn't make money yet, but that's okay. This is a fast growing company. And again, all I care about is the trend and is there a pathway to profitability with these companies? And then from a technical standpoint, Joe, I like the setup. You probably know what I'm going to say. Down here, the red days. Not a lot of red days. Not a lot of volume on those red days. Pretty solid volume on the up days. And we just broke out to the pivot point above the prior peak in February and in April. So this stock is no longer in drawdown. And I love it when they break out and then they give me an entry the next day. So we broke out yesterday and today it's pulling back a little bit on what looks like it's going to be low volume. This is not a bad place to take a swing at C Limited in my view. Next up, healthcare, Roche Holdings. And again, from our ADR best and worst list. Excuse me, I had to get a sip of water. So Roche Holdings, big conglomerate, produces a lot of drugs for a lot of different indications. They dabble their toe in genetic testing and that type of thing. Big company with fingers in a lot of places of healthcare. And, again, Joe, huge volume on this run up. ADRs don't usually trade as much volume every day as trades on the New York stocks trading on the New York Stock Exchange or NASDAQ. So I don't worry too much about these crazy looking gaps on ADRs necessarily. But we did have that breakout. We are pulling back to the 21-day moving average on volume that's lower than the buy volume as it was rising. And my feeling would be here, okay, take a swing and see if it can move back up into the pivot point and go higher. And like I said, Joe, I'm looking for names that can in healthcare to increase my exposure. And this company's does a tremendous amount of business across healthcare, tons of very, very widely used medications in its product lineup. So Roche Holdings is one that's intriguing to me. Next up from the ADR list, Dassault Systems. Symbol there is DASTY. They do 3D modeling, simulation, help you design virtual worlds and prototypes, and basically stress test those things before having to invest all the money in actually producing them. So the company is very profitable, going to grow revenue Well, it grew revenue 10% in the March quarter to 1.4 billion roughly, and earnings per share expected to be up 14% this year and 10% next year. Broke out to brand new highs this week, Joe, and again on volume. And then you have the breakout in the down day today. So I think not a bad spot to take a swing at Dassault. And then Joe, I don't know if you've ever done any travel to Mexico. Next one up here is Volaris, Mexican provider, ultra low cost airline service to Mexico and select destinations. And this is really, again, a play on, okay, pack your bags and let's get moving around the world in a post-pandemic vaccinated world. And I think that, you know, Volaris stands to benefit from it. You've got a huge accumulation occurring through this in the middle part of June. You've got the stock flirting with, you know, highs on the daily chart and the potential to significantly see its earnings per share grow in 21 and 22. And I know a lot of people, Joe, because of concerns about getting back into the US, have been delaying. Like, for example, my mother used to live part-time in Mexico and hasn't been there in 18 months because she was concerned about, will I be able to get back? So, you know, I think that there are some pent-up demand for travel to resort or vacation destinations. We talked earlier in the show about that technology free research on Seeking Alpha. Google will put that in the show notes. We have a link to it. So if you want to read that article on technology moving up the ranking, one of the 5 stocks in that article I highlighted was Crowdstrike Holdings, symbol there is CRWD. And Joe, quick question. Do you think that the number of cyber attacks are going to increase or decrease in the coming 10 years?
Not even a question. That should be a statement. The answer is overwhelmingly yes.
And do you think that those attacks are going to innovate and that these attackers will change up how they're going to be attacking?
They do every single time.
Absolutely agree with you. And that's why you want to own Crowdstrike, CRWD. Crowdstrike's got an interesting business model in that it aggregates information across all of its clients to look for common themes in AI that it can use to benefit each individual customer. So it's crowdsourcing threats to be able to provide a better level of coverage to the enterprises that sign it up. So growing very fast for obvious reasons, 70% year over year in the quarter ending April 30th to 302 million. Earnings per share expected to be, wow, in fiscal, so 27 cents in fiscal 21, 39 cents in fiscal 22, up 44%, and 70 cents in fiscal 23, up 79%. And again, like I said before, Joe, I love these when they break out like this I did this week to a new high, and now we're pulling back down to the bottom level of that pivot, maybe giving us an opportunity to get exposure to that stock. Next one up, Live Nation Entertainment. This kind of flows into what we were talking about a few weeks ago with WWE, World Wrestling Entertainment.
Sure does.
And yeah, again, post-pandemic, let's get out there, let's do stuff kind of play. I won't even bother looking at the revenue on this because obviously there was no live entertainment, you know, during the pandemic. So your comparisons are kind of irrelevant. Maybe it's relevant to the degree that it shows you just how much it could bounce back. So in first quarter, it's down 80% year over year. So if our assumption is that we're going to get it back to going out and doing things and seeing acts live, then Live Nation might be a stock that you want to get into your portfolio. The symbol there again, LYV. Next up is in healthcare again. Looking at insurers, Joe. Insurers, especially within Medicaid and Medicare, because Medicare benefits from the demographics of an aging population, and Medicaid theoretically could benefit if we get any form of healthcare reform under the current administration. Molina is one of the big players in Medicaid, providing Medicaid services within various states throughout the United States. It's been acquiring companies, it's growing internally and organically. As a result, revenue up 43% year over year in the first quarter, and they're expected to earn $16.35 a share in 2022, up 23% from 2021. As far as technically, hit the bottom of its channel on the chart around 240 about 2 weeks ago, kind of in no man's land in the middle of that, bumping its head up against the 50-day moving average now. Maybe I would wait see if it can get above the 50 and then pull back, hold the 50. But, I don't mind this kind of a setup. So I think you could probably go ahead and take it here and then just put your stop loss if you're going to use one below that. For Molina Health, symbol there is MOH. Next up, Ulta Beauty. I think we talked about this on the show, Joe.
This has definitely been in a smattering in the past, but worthy of being in again.
Yeah, I mean, again, this is one of those plays where you probably know people who are customers of Ulta Beauty, and I think if you ask, I'd be curious, ask them and put in the comments below. Ask them if they're spending more or less time going to Ulta Beauty, more money on Ulta Beauty products. I think as we get back out in the real world again, you're going to see people spending more money again on beauty care products, and I think Ulta is a key beneficiary of that. You've got a nice base on the price chart going all the way back to March, with it trying to break out this week to new highs. And this is a very profitable company, expected to earn $13.90 in fiscal 23, up from $11.97 in fiscal 22. So Ulta Beauty is one that I would put in there. I own this next one, small cap, high risk, because it is such a small cap company, only $1 billion market cap company. OptimizeRX, OPRX is the symbol. Revenue up 48%, Joe, year over year in the March quarter to 11 million. 90 cents of earnings expected in 2022, up 80% from this year. And what this company does, Joe, is it helps connect, we'll say, medical salespeople, so pharmaceutical reps, to doctors through the doctor's current workflow. So rather than showing up physically in a doctor's office and asking the secretary, can I speak with Dr. Blank, and trying to pitch your product that way, this kind of just shows up in their electronic health system that they already have in front of them as they're meeting with their patient, trying to figure out, okay, what prescription drugs or what interventions might be helpful to you. So it's kind of digitizing the sales process for these companies, and obviously nice COVID tailwind for it. And I think, if the assumption would be from here is people realize it's a little cheaper to market to these, physicians digitally than it is to actually send someone knocking on a door. So OPRX is the symbol there. Again, big volume on the up day, coming up against the old high it set in February. Joe, what do you think? Do we have time for one more? I know we're going long.
Go ahead.
All right. In healthcare again, Ironwood Pharmaceuticals. IRWD is the symbol there. They make a drug called Linzess. Linzess is co-owned by AbbVie, so they split profits and costs on it. Revenue in the first quarter up 11% to 89 million. They do earn money, 90 cents expected in 2021, $1.12 expected in 2022. The stock has moved, Joe, from about $12 to $13, so about 10% in the span of a week or so. Pretty big move for this company. And I think that it's moving on the thinking that, okay, maybe somebody, AbbVie, whoever, is just going to buy them outright and take full control over Linzess and whatever they may have kicking around in the pipeline. I don't buy stocks solely because I think they could be M&A targets, but I do think that it is a company that could be an M&A target, and it certainly is intriguing, high scoring in our research, and checks enough boxes where if you get a down day of a couple percent, maybe try to buy it somewhere, around that $12.70 range and see what happens.